The SEC just proposed the biggest shakeup to public company reporting in 50 years. Most firms are still processing what that means. Here are 5 things that matter and what CPAClub is watching as this plays out. The filer system is being rebuilt from scratch. Right now, companies navigate 5 separate categories: large accelerated filers, non-accelerated filers, smaller reporting companies, and emerging growth companies. The SEC wants to cut that down to 2. Large accelerated filers would be companies with a public float above $2 billion. Everyone else would just be reclassified as non-accelerated filers. For a lot of mid-sized public companies, that shift comes with real benefits. And for audit firms, it changes the client landscape entirely. The headline for auditors is 404B. Under current rules, most public companies require an independent auditor's attestation on internal controls over financial reporting. That's the Section 404B requirement under SOX. The proposal would eliminate that requirement for any company classified as a non-accelerated filer. This relief was always available to smaller and newer companies. If this passes, it extends to roughly 1/4 of all corporate registrants. That is a meaningful reduction in ICFR work for a significant portion of the public company audit market. Quarterly reporting as we know it may become optional. The SEC is proposing a new form, Form 10S, a semi-annual interim report that companies could file instead of the traditional 10Q. This election would be made annually via a checkbox on the company's Form 10K. This is opt-in, not a mandate. But if companies move in this direction, the audit calendar changes too. Firms that staff heavily around quarterly reviews need to think through what a biannual cadence means for their workflow and headcount planning. The proposal extends scaled disclosure accommodations to all non-accelerated filers. These are accommodations that previously only applied to emerging growth companies. We're talking reduced executive compensation disclosures, streamlined financial statements, fewer required line items. For mid-sized public companies, this changes what the filing looks like. And for auditors, it changes what you're reviewing, testing, and opining on. It's important to note that none of this is final. The SEC has put this out for public comment, and there's real debate on both sides. Proponents say it reduces compliance burdens and makes going public more attractive. Critics argue it reduces investor transparency and information. What we're watching is how broadly companies actually elect semi-annual reporting, whether the 404B rollback survives intact, and how the comment period shapes the final rule. As this develops, we'll keep bringing you the analysis of what matters most for audit firms. If you're running a PCAOB registered practice or advising public company clients, this is not background noise. This is a fundamental shift in how the reporting and auditing landscape could operate. At CPAClub, we're helping audit firms build systems and people to stay ahead of exactly this kind of change. Reach out to us if you have any questions.